Good morning, everyone. This is Nadex morning analysis for January 14th. My name is Todd Rich. I'm with Nadex. With me, as usual, from Keep Trading Simple is Brian Caprice. Before Brian and I talk about some hot spots to look at in the markets today based on some timely news, I do need to share that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And lastly, this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now, just to tee it up today, there's some news, and it's a bit. Number one, we had the initial jobless claims this morning in the U.S. And based against consensus estimates compiled by Bloomberg, we came in way over. Initial jobless claims were just shy of 1 million when they were only expecting 789,000. Not only that, the continuing claims, where they were expecting around 5 million continuing claims, it came in around 5.25 million. We're hitting levels in jobless claims that we haven't seen in 5 months. We are going the wrong way. Certainly not good news, but on the backs of that, we are also getting some news on regards to stimulus from the next administration. Brian, I'm actually going to flip that over to you, and we could talk about that. And we could talk about, I think gold is still an interesting story to talk about in regard to this news, and then we'll take a look at some other markets.
Yeah. So obviously, the 695 or the 965, a really huge number. We mentioned it yesterday. I did mention the fact that it is probably not as important today as it would be any other day, just because of the other things I have going on. You always expect January, the number, in the beginning of January, higher with the December and the seasonal numbers and things like that. So, I'd always thought that the 4 would be a bit off on this one. It is definitely higher than what I thought. Rolling forward innings today, and why it's probably not as important of a data figure today. Again, when Powell's speaking, there's certain things that he's going to have to say today that are probably going to be very pro stock market. With the unemployment claim number being high, remember, everything tends to be about fair balance in life. If one is really, really bad, the Fed chair will typically talk about supporting the economy and supporting business, and again, handle things from more of a business standpoint, which traditionally back over the last, probably 6 months, every time that he's mentioned supporting business and doing what they need to do, keeping interest rates low, a pro-business environment, there's always been big response to the upside in the indices, right? Couple that with what we heard this morning. Biden has come out this morning and mentioned to his aides that it's going to be about a $2 trillion package. Now,
Sounds like a lot.
It sounds like a lot, but I think the reaction is actually kind of justified. I mean, you're seeing gold drops $20 about instant. Many people would say, well, wait a second, this should go up. Well, earlier this week, and again, earlier this morning, it looks Schumer came out and said that we would have about a $1.2 trillion package. Well, earlier this week, all we kept hearing was about a multi-trillion-dollar package. People hear multi, or many, you tend to think 3 as a minimum. So you hear 1.2 and 2 trillion, it's not quite as much. And again, we've seen this in the past with some of the other stimulus plans, where you say stimulus is coming out, gold's going to the moon, and it did the exact opposite. Well, the reason why is because the market was disappointed. The market prepared and planned for much more than what they actually got. Is $2 trillion going to be enough? I mean, yesterday I was joking about how we had the appetizer, the main course, but there was still room for dessert. Guess what?
There's a lot of dessert.
2 trillion may not be enough. And again, the market assumed multi. If you say I have a multi recipe, multi-ingredient recipe, you're not thinking 2. You're thinking 3, 4, 5. You're thinking more than that. So I give specific details about it. But remember, gold needs inflation. The people go there and buy gold, and the price of that through the roof as a hedge for inflation. That's perception. If there's not as much money circulating as people originally thought, that's not necessarily positive for gold. We're not seeing inflation, if inflation pressures come in. So at this point, although we have a little bit about it, I'm going to roll back and, we're going to go back to Powell because at the end of the day, he's the guy that's going to mention raising interest rates, not raising interest rates. We heard that, at this point, it may be 2023 before we can attempt to do that. At this point now, it could be more stimulus, but it just shows that the economy is in a dire situation than many people believed, which, again, doesn't bring inflation into the market, doesn't really benefit gold. And when you have a disappointing kind of stimulus package, and again, it's great, ever 600, now maybe it's 1,000, but when we were told we were getting 2,000 before, I don't know, it kind of leaves a bad taste and kind of a negative intonation on things. So
definitely,
like I said, I think all eyes need to be on Powell later today. Looking at chart wise, we mentioned this yesterday that we could eventually hike to the 1860, and we don't know exactly when it's going to break, but it will. Eventually, there will be no more sellers, and we're sitting right here. If you guys can't see my cursor, but from where we are right now, I'll actually just draw. It makes a little bit more sense. You guys can see it. We were sitting right here yesterday. Where this. I'll change this box to yellow so you guys can see just a little bit better. I know for some reason the cursor doesn't show up here, but you guys can see this yellow box. That's where we were yesterday. It was an area where we had sellers. They've come in the past. It was the third, fourth hit. We said, hey, listen, if it breaks any higher, go long. It didn't. It rolled back, and you can see the reaction off of that stimulus has basically been null and void. It really hasn't done much. I mean, from earlier today, we saw a bit of a push down, but I wouldn't say that there's anything earth-shattering right now in its response. And again, this is an hourly basis. We can go down here and drop it down to a 30 for a little bit more in touch. Now, in 20 minutes when the retail trader steps in, does this have the potential to bounce a little bit higher? Answer is, I would say absolutely yes. The reason why is because people hear stimulus like, oh, okay, let's go to the gold market. But remember, the people that are more in the know are the ones that are going to be making money in this. They probably are looking for the bounce. At this point, I would say I wouldn't even be looking for much of a break above, let alone probably more of a trap type situation where people hear stimulus, they go, here's inflation. But, again, remember, everybody that's in it right now, long, they're waiting. And again, these are trap situations. So, like I said, Powell has the power to move this a lot with what he says today. And the way to play that, again, it's 9 o'clock in the morning. It's a little bit difficult to play it now. But we know when Powell is speaking. We also know that volatility tends to shrink up around lunchtime. I would say jump into some of the smaller things today, some of the shorter duration binaries with the smaller widths. And again, maybe even some of the smaller ones. I know myself yesterday, I was into a 2-hour call spread in the pound right after our session. It may be another one of those things if you can find something near a floor or ceiling today around, again, after the initial response this morning.
Right.
Look to see if we can get floor or ceiling with, reduced risk, smaller strike width, and, take it from there, kind of see where price has been driven. So it's definitely an interesting situation right now.
All right, I'm going to flip this over to the Nadex chart. And by the way, I mean, here we're taking a look. And the crazy thing about gold right now is it has been range bound with this 1860 level above, where it just, we're waiting for it to test that and break through it. There was this emotional reaction here. I mean, a pretty strong sell-off. Interesting thing, that 1830 level below, which, I mean, this level goes back. I mean, it goes back a ways. Yeah, that was actually a buying opportunity if you were paying attention.
We've talked about that a few times.
Yeah, late last night, you saw that dip down. There was definitely an opportunity to pick it up at that 1830 level. This expires. I just want to take a look. Let's take a look at some of these gold. I'm just going to take a look at the shorter duration. If you want to, I mean, this is the 130. Let's just take a look. I just want to see what's going on in the knockouts. I didn't take a peek before we jumped in here, but and I'm just going to bring up any of them because it really doesn't matter. I can always change which knockout I'm looking at by clicking on the blue lines over here. Yeah, there are some levels where if you're looking for it to take a quick bounce, there are ways to play this with knockouts, knowing that if you're wrong and something crazy were to happen and goes the other way. I agree with you. We need to be paying attention to what's going on. It is 12:30 Eastern, 11:30 Central. When Powell starts talking, let's hear what he has to say and what he says to support the equities markets, which he'll often look to do, which, could have a counter effect potentially on gold, depending upon what he ultimately says. So definitely something to be looking for. Let's look at.
Yeah, if you could switch back real quick, I just want to point something
Yes.
out. One additional thing about that. So, guys, remember, every so often I click over and we're talking about daily effects and what the client sentiment is, and we talk about you need buyers and sellers to be able to have that market back and forth. And we talked yesterday again about how they were talking daily effects talking about a gold breakout, and everybody was talking about a gold breakout, and it was a viable possibility. But we had seen that the sentiment was extremely kind of one directional, right? Like right now, I don't know if you guys can see this. Let me see if I can make it a little bit bigger. Yeah, you guys can see right there. 83% of the IG client now is long. And yesterday we mentioned the same thing. When all the news talks about going long, when most of the population is, again, what do you tend to see? We saw a short position from yesterday. Right now, again, you're seeing that the gold forecast is bearish, but yet 83% of people are long. And you're seeing articles about the recent sell-off may not be over yet. They're saying, oh, wait, it could get worse. Right? So, again, today it was all about, hey, listen, look for the breakout, look for the breakout. Everybody was long. And again, it's saying who you're trading against out there in the markets. And in fact, it looks like the shorts are starting to kick in a little bit more, but for the most part, is a very high number of people being long. And again, unless Powell, I wish, this didn't reset, but so we could see it, really, unless Powell says something earth-shattering, it seems like everybody that's like, hey, we need to get long, we need to get long. I mean, as this continues to drive lower and lower, those people, every single one of those people that is long, as this goes lower and lower and lower, it becomes more of an emotional gut check of, oh, maybe I was wrong. Maybe I was wrong. And then eventually when that kind of, I need to get out of this, that's when we can start to see some major kind of movement to the downside as it wipes everybody out before finding a bottom and going higher. So gold is a very interesting story right now. And like I said, Powell at 1230 is a huge piece of this.
All right, let's do one other market quickly while we got everyone on.
Yep. Yeah. So I would like to kind of talk about the ECB real quick. I don't know if how many of you know this, and again, this kind of snuck under the radar today, but Italy is having some political issues where one of the minor is that they have multiple parties, they don't have the two-party system there, has actually decided to leave the governmental coalition. We're not basically. They joined forces, form a coalition. They've actually left. So there's some political turmoil in Italy. This is an article that came out earlier today from Bloomberg talking about how the ECB is no longer a viable cash machine for governments. I don't know that this is tradable today, but it's something to definitely keep on our radar because it's talking about because of the subsidizing the financial industry, because the central bank has just been sending money out there. And I'll highlight this so you guys can see it. It means that there is less money feeding into the national treasuries, smaller profits, and even losses are tangibly evidence of the monetary policy. Okay. What we're seeing is less money going back into the individual nations. If you guys remember a few years back, the pigs, Italy, Greece, Spain, they had major problems because, again, the monetary policy is based off the central bank, the ECB. Their individual nations were unable to keep up with the industrial powerhouses of Germany and France. Now we're hearing about political strife in Italy. None of these things bode well for the euro. Okay. Overall, we're seeing the euro in the last, and again, this is a 4-hour chart. Really, in the last since Brexit got decided and we hit 2021, we are seeing the euro push to the downside. Now, this is the euro dollar on the 4-hour. There's one area that I'd like to point out. I'll move this to the side. Right here at 120.80, you guys can't cursor, unfortunately, because I can't get any lower than that. It's so weird that it takes my cursor out. But 120.80 to 128 or 120.60, it's kind of the bounce. It is, I don't know if you guys can see the arrows on it or not, or probably not, but I'll put a check on it. That level right there, you guys can see. Last time price was there, we had a decent level of basing. It ended up kind of triggering sideways and bouncing higher. As we approach that, that could be a minor area where we see it kind of turn and flip back to the top side. A lot of this has to do with Powell. We're sitting about 34 pips in the next 3 hours. That could absolutely move 30 pips down. For Powell to mention something about the weakening dollar, and then it popped to the top side. So, again, Powell will affect the indices, but he will absolutely, without a doubt, affect the dollar and what he says. He has the control over the central bank. Right. So, yeah, so definitely an area where we could be seeing a rollover, again, if we continue to push down more in the next, 30, 40 minutes.
All right, so I'm just going to flip over to the Nadex platform, and these are the binaries. These are I think this is in the 3 o'clock ones today. And here's that level down below that you're talking about, that, the 120.80-ish level. There's plenty of binary strikes in here that you could, if you were looking for this thing to continue to sell off in the short term, to continue this. And you know what? I'm going to do this so you can really kind of see how it's been selling off. I think that's a little easier to see. There, I just want to make sure everyone can see it. With that 120.80 level below, there might be an opportunity to short something and try to as it continues to go down, and then again, you don't have to wait for it to settle. You can sell it, and if it continues on a downtrend, you can buy it back at a lower price, and then wait. I mean, if it gets down to this 120.80 level and it starts to bounce, rolling back to the upside based upon any announcement from Powell, you can just go the other way. So that's the nice thing about these binary options. You can take a short position and then change your mind and go long. So there is definitely some trading opportunity. Keep your eye on gold. Keep your eye on the euro US dollar pair. As Powell speaks later today. Again, that's in just over 3 hours. So you got to be aware. Eyes on the road.
Mm-hmm.
All right, Brian, is there anything else? I'm going to flip it back over to you. If there's one other thing you want to
I would just say, again, very, very fast, quick little 20-second blurb here. Watch oil. Oil is obviously moving. It's down 0.58% thus far already today, back down in the 52.50 range. Interesting enough, OPEC is out there making statements, and I don't feel like the market believes it. OPEC is mentioning while the strong global economic recovery in 2021 remains very likely. Again, I don't think people are believing the headlines.
Yep.
They still say there's a lot of uncertainty. So, again, OPEC is out there saying strong demand, buy oil, and the response today has been oil down 0.5% already this morning, pulling back down. We're up at the 54 range, and we're back down in the 52, 53. So, again, Powell mentioning recovery, demand will probably also affect oil. So don't forget that one today as well.
Yeah. And they always take OPEC with a grain of salt. Never.
Exactly, right? Yeah.
Kind of have to. All right. If you got any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, you can email him at support@keeptradingsimple.com. I also chatted out a link for Trustpilot. If you could take a few minutes and give us a review, we would greatly appreciate it. I like to give that little plug. With that, I want to let you go get ready for the U.S. equity open in 12 minutes. Brian and I will catch you again tomorrow morning. Good luck in the markets, everyone.